All right, so here we are, episode 1000. Can you absolutely believe it? This is so awesome. And all this time I've been teaching you guys how to create financial freedom and time freedom and everything else. But now it's your turn. And so I've actually invited some of our actual Ripplers, people just like you, to come on and ask me questions rather than me always just spurting out stuff. So it's gonna be an exciting conversation. And by the way, no script. This is raw. This is not rehearsed. This is just in the moment, spur of the moment, and you guys get to see the benefit. So here we go. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you if you want your money working harder for you, so you don't have to work so dang hard for that money. You want to become work optional, where you work because you want to, not because you have to. And again, thank you so much for 1,000 episodes that we've been in now over the last 11 and a half years of doing this show, all because of you. If you wouldn't mind, do us a favor. Share this with a friend. Let's create a bigger ripple effect. Let's see whose lives we can bless, because we want 1,000 of you financially independent by the year 2030. All right. So as I mentioned, we're going to do this a little bit different today, right? It's a little bit different script. Rather than just me talking to you, this is actually where you're asking me the questions, right? And we're inviting you guys. I don't know. And if you guys think this is a great format, let me know in the comments, because this might be something we do again. But I'm really excited for this, and especially because I'm inviting two different friends here. We got Jeff Holbrook joining us, and we also have Jen joining us as well. Both of these people, honestly, just volunteered. I know there's several of you that volunteered as well. That's why we have some of you guys waiting in the wings if we want to do this again. But I was so excited. I mean, you guys jumped on it, especially Jeff and Jen. Man, you guys, I think you did not waste 4 or 5 minutes before you responded. So excited to have you guys here with us today, and just give quick 30 seconds, just who you are, where you live, and what do you do?
I'm Jeff Holbrook. I live in Salt Lake City, Utah. I'm a physical therapist and a father of 5 kids that keeps me on my toes and keeps my life interesting.
Yeah, absolutely.
Um,
Glad to have you. Jen?
okay, my name's Jen, and I live in Montana, and I farm and ranch, so I get to spend hours binge listening to fun podcasts. Really enjoy the money ripples and the rabbit holes that it leads me down, and all the interesting guests that you've had. And yeah, it's been a great learning experience for me. So that's kind
I'm
of what I
glad.
do.
I'm glad we're in one of the rabbit holes you went down. That's awesome.
Yeah.
So, all right. Well, we got the Intermountain West represented for sure. So let's get started. I know Jeff, I know you've got a question prepared. So let's start with your first question.
Yeah, I just want to, how can an average Joe become financially free? Someone who lives paycheck to paycheck, already living a no frills lifestyle, like no paid streaming services, little to no coffee houses, right? Very little eating out, older car, just keeping an older car maintained. Uh, maybe not contributing much to a 401k or an IRA, right? Truly like
Yeah.
paycheck to paycheck, little to no discretionary income, already picking up some extra hours, not an accredited investor. How can that kind of a person follow your work optional blueprint and get ahead?
I'll say this, it's not easy. It's not gonna be like overnight.
Right.
Definitely not get rich quick, which never is anyways. Even if you have lots of money, it's never get rich quick. But that's a great question, because I was there. As you guys, if you've been listening long enough, you've heard my story about me going over $1 million in debt and having to dig out of it. It's not easy, which is why I created the whole cash flow process, that we have, like cash flow secrets. Is something people can get on the website. The Wealth Accelerator Academy is another thing that we do as well, that dives into how to find and free up cash flow. And that's the first thing. Because if you are paycheck to paycheck, you feel like there's too much month at the end of your money, right? If it's like that, then the best thing to do is really focus on cash flow. Like, how can we find and free up cash? And like you said, even if somebody's not spending a lot of money, they're not just frivolously, blowing it. And lately, it's been worse with inflation. It's been so much harder. The best thing you can really do is try to find and free up that cash. Are there ways to free up money on taxes? Can we pay off debt and using the cash flow index and be more creative that way? But here's the one thing that's harder that I mentioned that people do ignore. Both Warren Buffett and Charlie Munger talk about this. In fact, I actually just had my one of our 15-year-olds listening to this Charlie Munger interview recording, talking about how the first $100,000 is the hardest, and that should be your whole focus. So if you're just start to put money away, and you don't even have up to that 100,000, don't even try to worry about investing. Don't do anything. Your whole focus is how do I get up to at least that $100,000 before I even worry about investing? And so the biggest thing that people forget as a money leak is income, because often the biggest money leak is the money that you could have been making that you didn't, right? The money that could have been earning. And it doesn't require you have to work an hourly job. It's just a matter of how do I go about creating more value? How do I solve problems for people, serve people in a way that money comes back? And when you start to focus on that question, because expenses you can only cut back so far, but income can be limitless. And that will get you to financial freedom and get you the capital and the cash to start investing faster than just trying to say, hey, I've got 10 grand. Let's make 10%. You make $1,000 a year. You're like, woohoo, now I'm up to 11,000. I'm going to get there fast now at this rate. Like, you don't want to do that. Like, you really want to figure out, like, how can I get as much cash to put away as possible? Does that mean I need to refinance my house and lower the payment? Which, even if it gives me a higher interest rate, maybe that's something to look at, right? So really, again, how do I get more cash in my pocket? That should be your number one focus, is just building up that cash. That's why infinite banking can be a possibility of with as additional strategy to help there. But again, it's always about how do I build up that cash and increase my cash flow now? A great question. All right, Jen, I'll switch it over to you.
Okay, so I have been really learning a lot about infinity banking, and I was curious to know how your Max ROI system compares to the one designed by Nelson Nash.
Yeah.
The Without the Bank is one that I've listened to a lot of podcasts on too, and I'm just wondering how do we compare those two?
Yeah, Nelson Nash teaches a great concept. The difference is, see, Nelson Nash talks about the concept of using your money and having money flow in and out of your life insurance over and over, which is a concept that can work on anything, especially with whole life insurance. He did say himself that's only with whole life insurance, not universal life insurance. But the big difference of what we do is twofold. And maybe I'll come up with a third fold. I don't know. It's twofold, at least in my mind right now. One is that our perspective has always been about cash flow, financial freedom, right? Passive income. Most people that teach infinite banking talk about this long-term account, right? Like building up this money long-term. Yeah, the money goes in and out. Sure, you might pay for a car or something with it, right? But it's always about using it in the here and now for not avoiding debt, almost like doing a Dave Ramsey method, but then also using it for retirement later. We talk about, kind of like the science says, live your life now, not tomorrow, is how can we actually use it to benefit your life today? So instead of using it to just buy cars, which we were just like, nah, it's probably not worth it, or buying houses with it. No, we might use this money to invest to create more cash flow. Or it's just a great place to store a lot of money, especially if you're not sure where to put the money right now. It could be a great place just to store more cash. Or maybe you are ready, but you're just like, yeah, I don't feel like the timing's right. I feel like there's more opportunity later. If we go into a big crash, I'm waiting for a crash, so I'm building up more cash. That could be a great place to store it. So it's more like the here and now and emergency reserves, and in a war chest that we use to invest today. But here's the other second point that's way drastically different. And this is different even among people that teach Nelson Nash's stuff, right? And I'll be fully honest, I'm not a Nelson Nash approved, licensed person. I learned it. I thought it was really simple concept. I didn't see the need to do it. Some people are like they're like orthodox Nelson Nash people, like you have to have a license, even if they set up a crappy policy, right? And that's where the second thing comes in, is the design of the policy is everything. Because when I first learned about Nelson Nash, they were talking about doing these straight premium policies where those first 2 years, I would have zero cash in that tax-free savings account, right? Obviously I had the death benefit and I had this nice big death benefit, and the people teaching it would blend it with their insurance company training that they would get to say, oh, you need the biggest death benefit possible. And therefore you're going to have to wait probably 15 years before you finally break even on your costs, right? Where you finally have as much money as you paid into it.
Yeah.
At first I bought into that method, but then I realized I was being brainwashed. I thought it was BS, especially when during the recession, I had to give up my policy that I paid 25 grand into because there was no money in it, but it all went to paying for the insurance costs, which of course pays the commissions for the agent, right? So I made it my mission ever since about 2008 to figure out how do we lower those costs so you get the max ROI possible out of the cash that's in that policy, not your death benefit, but the cash. And that's the
Okay.
thing that really sets us apart with how we do it. Because I mean, there's people out there that talk all day long about Nelson Nash. They'll say, yeah, first year you'll have 60% in your account. Isn't that amazing? That's better than zero. And it's like, yeah, it is, but they should have like over 80% in the first year, not 60, you know? So we try to reduce those costs as low as possible to get the highest ROI on it possible. And that's what really makes ours drastically different. I mean, it literally saves people tens of thousands, if not hundreds of thousands of dollars of unnecessary costs that they don't need.
That's huge.
Yeah, it can be. It can be huge for sure.
I can totally relate to Jeff's questions. So saving that kind of money is huge.
Oh
Mhm.
yeah. It's just like, you think about, going back to what your question was, right? I mean, I had a guy that was a young kid that did do a policy with somebody who was very popular. And that $10,000, he was trying to put in per year. He was happy because he's like, man, look at this policy. I'm going to have $7,000 in year one with the other guy. Only for me to tell him, hey, you're in your late 20s. It should be like $8,000 in year one, not 7,000. You're literally overpaying $1,000 a year. That's 10% of your money.
Yeah.
So even if like, well, that company can give me a higher dividend by 0.2%. Who cares? I'm giving you a 10% additional return on top of it. Their 0.2 can't compete with 10%, so that's where it does make a big difference. I mean, we have big money, whether it's big money or little money, it doesn't matter. It makes a difference. So, thank you. Right now, you guys have some additional questions you might have. So Jeff, I'll throw it back to you.
I was just kind of wondering, you mentioned that you were $1 million in debt and had to climb out of that. Like, how long did that take you? What was, and this is just pure curiosity. Like, I'm not
Yeah.
planning on trying to climb out of $1 million in debt, but, maybe that's a little too personal, but that is something that I've always, every time you mention it, I'm like, how in the world did he do that? And how long did it take him?
Oh, it took forever. Well, it felt like
I'm
it.
sure.
So yeah, it went in phases, right? Because yeah, I usually gloss over it. So it happened like this. So like obviously 2007, I saw that I was in trouble, going into late 2007, and then it didn't get any better because I couldn't get the equity out of my house. So 2008, I'm desperate. I'm freaking out, um, and that was like for months of freaking out, right? So like night after night, sleep deprived, that kind of thing. And so my first thing was just how do I get my cash flow under control? So I started tracking my money in 2007 again. I'd stopped doing that in 2006, got back to it in 2007. That's when I found I was in the hole like 15,000 a month. I'm like, dang, like, okay, I got to really do a lot. So I stopped paying everything. I stopped paying on all my debts, including my mortgage, because I'm like, it doesn't matter at this point. Like I'm broke. I can't even feed my family. I was on welfare. That did help. I got help from some family and friends, and church helped, and things like that. So I mean, I was literally, my wife at that time, she was like, man, like you don't even know how bad and humiliating this is for me. You need to walk in and you need to get these food orders just so you know what it's like. So I used to wear a suit at that time, right? So I'd actually walk in a suit thinking I was the guy that had this all figured out, and now look at me, I'm like flat broke. So I turned in everything I possibly could, sold everything I possibly could. Like I turned in my Mercedes. I turned it in before they could repossess it, before they even worried about it. I was like, hey, I'm already a month past due. You're gonna in the next couple of weeks try to repo it. Here you go, take it. And then they auctioned off and it was 30,000 I still owed after the auction because I think it auctioned for like 20,000, but I owed 50,000 on the Mercedes. So they were calling me up like crazy, like, are you gonna pay this? I'm like, if I could pay it, I would have paid it. Obviously, I don't have 30 grand, duh. And then of course, like the house, like I was trying to sell the house, but then the equity eventually evaporated by 2008 or so. So then I tried to short sell the house, but then Lehman Brothers wouldn't let me do it. They said, nope, you have to foreclose. But we kept it out of foreclosure for a while until finally April 2009, it went to foreclosure. So all the meanwhile, the only thing I kept is the family minivan. Like that was the thing that we did lock away in our garage so that nobody could repo it. Parked it at down the street or something so nobody could find it. Or we were always like on guard, like make sure they couldn't repo that too. I did try to keep up on that payment the most, but almost everything else I just stopped paying on credit cards that had run up. Trying to think if I just make it a few more months, then we're going to make it in business. But our business was suffering. So that was going on there. So I was just trying to reduce everything, sell off all we could. Eventually in 2009, we did move into a house that was like a quarter of the rent payment. So we just crammed our whole family into a small little house and got it down to where I think my expenses were down at that point to like 4,500 a month, 5,000 a month. And then I mentioned the other side of the equation, right? Which is the income part. So all in the meantime, I try to figure out how do I make more income. And there was moments of bliss and disappointment that happened there. Like, for example, if you know a guy named Garrett J. White, he worked for us for a time. We were talking about soul purpose and how to turn your passion into income. Funny enough, that's what I'm teaching tomorrow, the day after this recording on a call. But like talking about that kind of stuff. But then he left, and then the company was going back to broke again. So it wasn't until that whole cash flow process I was starting to use, like, how do you find and free up money, which is what I was teaching from about really 2008 through 2009. Finally, it started to morph into a process. And then the right people showed up in fall of 2009. They were like chiropractors and dentists, or coaches of those practices. And like one chiropractor, we seriously saved him like $50,000 a year in taxes. And he literally cried on the call, like just bawling. I couldn't tell if it was out of pain or joy. It wasn't clear, but all I know is he definitely did not turn down the 50,000 extra savings. But that got him yapping, and talking about us, right? So we started getting more and more referrals, kind of created a ripple effect. And so by that quarter, things started to ramp up. And then in 2010, that's when we hit like 5 million as a company. We had like 250 new clients coming in that joined our program and stuff. So if you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. That helped me start making more money after I'd already reduced everything. So now I started to make a little extra profit. Now it's starting to pay off towards collections and judgments. And just even like getting rid of the house, like selling the house and stuff, or foreclosing on the house. I mean, that knocked out some of the debt. But I still had roughly over, even after everything was sold off, I still had roughly over, I think it was like 500,000-600,000 left. And so it's just chipping away. I did negotiate on some like credit, like credit cards or certain loans like that. Health, medical bills, I couldn't negotiate a whole lot. But I was just calling up whatever I could negotiate, I would do. Say, hey, I've got X amount of dollars. Can you take it? The Mercedes, actually, I did that where we negotiated. I think it was like $6,000 or something, because it went years of me not paying. So they're like, you can always tell when they're getting desperate because they start calling a little bit more. Because if they don't collect right away, like after like 6 months, it moves to another collection company. So the collection company who has it wants to make whatever they can right off the bat. So I'd wait till it's like that moment. It's like, hey, I've got this much money. Will you take it? And then they would. I had personal loans and stuff too. I finally paid those off in the mid 2010s. Those are the last ones I paid off. So I just got cash flow under control, increased income. Of course, 2012, I launched Money Ripples, and I was back to zero again. And so I was like, right when I was getting ahead, and then all of a sudden, bam, it's gone. I just barely posted on social media about the termination letter I got, where they gave me a whopping $1,000, like a goodbye gift, severance, even after I made them millions. I was like, are you kidding me? Come on, guys, you guys suck. So anyways, I mean, it was like, I was really having to, again, I was just having to like learn how to be lean and mean, and get scrappy. And so it was really like, I drove like a $3,000 like beater car. It was like a 15-year-old car that was like, had like 150,000 miles on it. It was like it was so bad. Like the headlights were just glossed over because they had been worn down so much, over the years. And so, I mean, I had no pride. I didn't care. I was like, whatever I got to do, let's make it happen. So that kind of lean and mean, and even with the divorce in 2015, although the things turned around actually after my divorce, I actually started making more money. And not that I recommend divorce, by the way, but it does help when you have the right partner on board with you. So between all of that, once I was able to get the debt under control, free up the cash flow, have more than enough, cash flow, extra, income that's there, then I could take that money, start building up that cash to then invest. So that's really what I did. And even a combination of that, I had some business residual streams income still coming in that I developed in 2015, going to 2016. And then of course I started having the rental income coming as well that got me over 10,000 a month. So that's pretty much the long version of how I did. But yeah, like I said, there's ups and downs, just like I said, new business, kind of creates a down, then you start coming back up, and then I had a divorce, and nothing's ever a straight line. I wish it were, but still the whole thing was just focus on cash flow. And then eventually my view as I built up more savings was from cash flow to then passive income. So I don't know if they even answered your question, because you asked like, how does that deal with the work optional blueprint? But that was like phase one of the work optional blueprint out of the 5 phases. And then I kind of glossed over the 4, right? But I mean, that's essentially what I did, right? It was this, I just, freed up the cash flow, got everything under control, then started building the savings to then invest it, get it out, create the passive income. Then I just start compounding that income too. So everything was just about profit, having more profit in my personal life and business life.
Well, thanks. That was really interesting. I've wondered every time you gloss over it in your podcast, I'm like, how in the world did you do that? But took a long time. Took about 15 years.
It did. I mean, really, you think about it, like it was summer of 2006 that I first got out of the rat race, right? And then late 2007, I'm back in it. So I like had that year and a half of joy. And then really it wasn't until the December 2016 when I was going through the numbers and I was looking at my cash flow optimizer, my spreadsheet that we have all our clients use. And I was like, wait, I did it. Like I'm there right now, like December 2016. So it was like almost an entire decade of recovery and doing that. But again, if it hadn't been for the fact that I, of course, had, the control of increasing my income, it would have taken so much longer. It would have been a hard battle. Granted, if I would have gone bankrupt, it would have been faster, right? Well, maybe. I don't know. I think there's emotional, spiritual components to filing for bankruptcy that may or may not be beneficial. I just felt deep down that I shouldn't file for bankruptcy. And in some ways, looking back, I see it's better because it does help in my profession, not to say, hey, I went bankrupt. I mean, Dave Ramsey did too. I mean, I could always be like, Dave and me are buds, but I avoided it because I figured if they weren't going to throw me in prison, great, I'll just pay them back whenever I can. And that's what I did. Great question. Jen, do you have another question for me?
I do. So both my kids have 16 and 14, and they've saved almost every penny that they've earned so far. So they both have $10,000 each in their bank accounts. Of course, earning 0.nothing%. So do you have any advice on what we could do to help them earn and then teach them to become savvy stewards of their money? I mean, it's awesome that they've got $10,000, but let's grow that.
Which is great that they got up to that amount, right?
Yeah.
And it's funny because I was talking about like getting up to the $100,000, and not even worrying about investing or anything else. And my wife and I were talking about that yesterday because I was talking about that Charlie Munger video, and then she's like, "Do you remember back in like 2015, we're talking? You'd say, oh, it'd be dumb to have money. Like you got to put it to use right now." She's like, "Now you're saying the opposite." I'm like, "Well, yeah, it could be either." For kids, I think it's a different situation. I mean, obviously there's not much they can do with 10,000 plus. It's not like they can go and invest in something because they're not adults yet, right? Or are they adults now?
No, they're kids, teenagers.
They're still minors. Okay. Yeah. So they can't do that. So here's something you can do. I mean, obviously, high yield savings accounts, CDs. I've done that with our kids as well. Like just put the money away. Yeah. We might be able to get better there. I know sometimes I'll even send an email about here's where like the weekly best high yield savings accounts are, and they're only around 3.5% or so right now. Currently, It's not great. I mean, there is the infinite banking thing you could do. Obviously, you're the one funding it, but you might have them reimburse you and do something that way to kind of help do it, or maybe you both contribute to it in a sense. That's another way you can do it, and especially after 5 to 10 years, you'll see that really start to grow more than just doing a savings account or CD. But the other thing is you could do too, and we've done this with some of our kids, is if they have a certain amount of money, I wouldn't say all of it, because maybe they're keeping some of it for college, maybe they're keeping it for other reasons that's short term. But if you have money like, hey, I can have a good 3-5 years of this money we could put away, what you might do is you might kind of partner together into an investment because you're the adult. That makes it sound condescending. You're an adult here. Come on, you do it. No, you're the adult. You're the one that obviously like has the the ability to invest. This is what we did. Like one deal we did, an oil and gas deal. And for whatever reason, one of our kids, the same 15-year-old, she was like 12 at the time. She said, I would like to be in that. And so what we did is we said, all right, cool. What can you put in? And so she paid us $200. And so we figured out the math. We're like, okay, based on the 50,000 investment we did, $200 is this percentage. Okay, you get paid X percent, whatever the percent that is. Now what we do is every month, whenever we get the money that gets, the returns that we get, we actually have her calculate, cool, what's your portion? And then that's the portion that we pay her, So it's kind of like she's involved in it. She's getting trained. It's almost like training wheels for them, but it's not like they have to do it all themselves. And so, I mean, easy math would have been if she had $500, you're like, cool, you did 500, we did 50, you get paid 1% of whatever you make. So if we make $50, you make 50 cents, or whatever. So you can do things like that. And just to kind of help them out. And we even, because it doesn't seem like a lot, especially when you, like I said, like $500 or even $1,000 is not going to make a ton. But when you kind of help them see, well, you could have your money in the bank, this $500 in the bank might make you $5 a year, or here you made 50 cents this month, but remember 50 cents a month is still $6, or whatever it is. Yeah, $6 or whatever it might be, or more. I don't know. I'm just throwing out the number. But yeah, it could be more. It's like, oh, look, you're making more than you would just letting it sit in the bank. So that's kind of one way you can kind of help train them. But definitely, I would not encourage to say, hey, just throw it all in, because it's a small amount. The biggest thing is really getting them on that target. Like, how do we get to 100,000? So great, you're at 10,000. Good job. We can still do some things with this money. Let's try to keep it as safe as we can and let it build, even if it's just in a simple high yield savings account. But let's focus on you generating even more income. What can you do to get up to that 100,000 mark? Because imagine if they could be 20 years old that's pretty incredible if they could do that by 20, but say they're 20 years old, have $100,000 saved. Man, how many of us wish we could go back to our 20-year-old selves and say, I've got 100 grand, let's do something with this now. That's just not happening. So, or it didn't happen in my life, at least. I was way, way broke, way into my 20s. So I think that's kind of a good way to help train them and get them thinking differently. All right.
Yeah, thanks for that.
Yeah, you bet. Now I know we're kind of like coming up on time, but are there any other, what would we call them? Like last minute questions, or, I was going to call them like wild card questions or whatever that you guys have, or you would like to ask? Okay, Jen, let's go for it.
So your podcast with David Morgan the other day in the centralized banking system was, yeah. I actually intend on listening to that again. What's your take on that? Like, ooh, that's scary to me.
It is. I mean, it's interesting because we get a variety of guests, and generally I get guests I think would be interesting. Like I do turn down anybody who's like a stock trader. I'm like, been there, done that, don't care. But yeah, David had definitely had a different take, and it was actually even different than I expected, because even he was talking about the collapse of the dollar not really happening right away. It would be down the road, and that's kind of the consensus I'm getting from most people that you would think would say, don't do the dollar. But you always have to take it with a grain of salt, because there's lean or there's slant, right? Because some people might be slanted way towards digital currency and crypto. They might say, oh, crypto is the way to go, right? I was like, okay, cool. Are you selling something on crypto, or is that your stance, and that's why you're so gung ho on crypto? And I always have to question that with a little grain of salt. But I do think, I mean, definitely real assets are the thing to be looking at. That's the one thing that's been tested over time, is what's real, what's not. I get scared about anything that's like we saw the last recession, derivatives, right? Like mortgage-backed securities, and of course they were doing subprime loans, and you could still invest in that. And now they're talking about not just adding crypto to your 401ks, but now they're even talking about adding alternative investments, including real estate type of investments. You would think that would be a good thing, but in my opinion, that's not. And the reason being is that, and actually I haven't done this episode yet, so it's, I guess, a sneak peek of an episode I have coming up. But the one issue is whenever Wall Street gets involved, they have so much money, they often will throw it away in stuff, right? They'll throw it into things and create a bubble. And that can be dangerous, especially if you're involved. It could be good in some ways because you create a bubble. And if you're on the selling side of that bubble, you're happy. If you're not on the selling side of that bubble, then you're like, oh, dang, banks and institutions did it again. They created another bubble, and here we go, right? That's what I more worry about, but that's why I keep going back to what's real, tangible, right? That's why I come back to real estate, business to some level, but again, recessionary times, I very much kind of shy away from businesses, in that kind of period. Not to say that they're all bad. It's just you have to be very, very careful and do a lot of extra due diligence. But that's why I keep coming back to real estate, gold, silver. I'm glad I bought gold and silver when it was way cheaper than it is today, and that's something I've always had as part of my portfolio. I definitely have some oil and gas based investments too. I have raw land. So again, I always come back to what's real versus the avoiding the intangible stuff? It's a great question.
Right now, a cow is worth about the same amount as an ounce of gold. That's kind of interesting.
That is interesting, huh? Entire cow. Think
Yeah.
about that. It's like, do I want an ounce of gold or a, 1,000-pound cow?
Crypto market's at an all-time high too, and so is the gold market, and they're worth about the same. It's just kind of funny.
It is. No, that's true. And I do actually think, when you start looking at things like what you're doing with cattle and things like that, assuming it's cattle, if you're, a rancher, but I think that's another real tangible thing that it is a commodity. It's very much like gold and silver. Because the truth is you can't eat gold and silver, but you can eat a cow,
Yeah.
and there can be a time, if things get really, really bad, let's just say there is a collapse, right? There'll be a time when they don't give a crap about the gold and silver. Yeah, it might be a medium of exchange, but that will be far less valuable than having the actual thing that keeps us alive, like shelter, which, yeah, it could be land even in general, right? Or even like you mentioned, like food. I think food is one of the best things to store up on because that is an inflationary hedge. It's like storing gold, even though it's gold you can eat, right? It's storing up food. So I think that's something that a lot of people don't really talk about, and including myself, that probably should be talked about more often. Well, again, guys, thanks for coming and joining me today. This was fun. Everybody else in the comments, let us know. Is this something that we should keep doing? Should we do something like this? Because I know I answer questions that I'm probably not covering in podcasts. So both, Jeff and Jen, thank you for your questions today.
Yeah, thanks for having us on.
Yeah, thanks. It's been fun.
Yeah. Well, everybody, of course, you always know if you can ask questions, you can always reach out to us, moneyripples.com. We've got a contact us form there. You can always ask your burning questions that either we can make a podcast or maybe it's something about your own situation. Let us know. But again, I'm super excited that we've had now 1,000 episodes, right? I mean, who would have thought? And I was trying to do the math this morning while I was on a run. I think it would take another like 6.5 or 7 years to get to the next 1,000. My goal is definitely this, is that I would love to have at least 1,000 families financially independent by that point. And so will you be one of those 1,000 families that becomes financially independent over the next 1,000 episodes? Love to see it. So again, if there's any way we can serve you, let us know. But guys, here's to another 1,000 more. Let's keep going. Let's keep our ripple effect going, and let's see what we can do to bless more lives as our lives are being blessed too. So guys, make it a wonderful and prosperous week, and we'll see you later.